Bitcoin knocks on the door of $73,000 as the UK, yes, the UK, welcomes crypto. Major update here in terms of the UK accepting applications for exchange traded nodes. This could be a major shift here, which allows more institutions to come into Bitcoin. Remember, this whole rally right now we're seeing, a lot of it is based on the fact that we got our ETFs accepted, right? The US accepted these ETFs. Now the UK could be heading down a similar path. So many institutions can now file for an ETN application for Bitcoin and Ethereum. And this could be one of the many reasons we're seeing Bitcoin show tremendous strength here. Yesterday, we spoke about the fact that we had a critical weekly candle close, a very important weekly candle close above the all-time high. This is a major coup for Bitcoin. But now, this week has just started. We've already started it up 4.6%. Insane strength here on Bitcoin. And the question now is going to be, how much higher can this go? We definitely have a huge short squeeze effect happening right now. Remember, we are also in price discovery, right? There is no resistance. There is no support for us to use. This is just price discovery right now here on Bitcoin. And now Bitcoin will move based on risk on, risk off measures, but also the supply demand dynamics. We know Asia are buying. We know the US are buying. We know now that the average retail investor is looking to come back into this market. We know people are buying meme coins right now, right? We're seeing a craze right now of money flowing into Bitcoin and cryptos across the board, and we're yet to hit our halving. This is an incredible move here on Bitcoin. And again, if you're not participating in this market, you need to ask yourself why. What set of ingredients do you need for you to participate in this market? Because I was having a long, hard think about this. Like, if you look at every single cycle of crypto now, different people entered at different times. But the main pattern, I know this was true for me, was you miss a cycle, you go, crypto was right. Why did I sell? Why did I panic sell in the bear market? And then you come back in with new vigor saying, I'm not going to fall for this again. But there are still so many people out there that are so damaged, so scarred, probably because of their own mistakes in terms of FOMOing into meme coins at the peaks, which they're probably doing right now as well, that they then want to say cryptocurrency is a scam, or they never allow themselves to see it as a real asset class which they can invest in. So my plea right now to you guys is, guys, treat it like a professional. Treat it like a professional right now. You know this market is extended. You know this market is hot. At the same time, you know that we're in price discovery. So be smart. Don't FOMO into green candles. But at the same time, why are you not in this market when I've been calling for this since 15,500 at the lows of Bitcoin? Saying, guys, come on, you're not going to want to miss this next cycle. Now the next cycle is here. We're in extreme greed right now. We know that. But you're still sitting on the sidelines. Okay, so that's the first thing I want to share. The other thing I want to share is, look, we need to monitor traditional markets, right? Let's jump into here and look at the dollar index. Remember, throughout this bear market, when we were monitoring it, the dollar index was our bee in our bonnet, right? Every time this would go on a rally, Bitcoin would struggle, right? Because risk was rotating off. Now we're starting to see here that this is good. The dollar index is getting rejected. This is the weekly chart here, and we're starting to send it into a downtrend. It failed to create a higher high, and this is good news. This is showing that the US markets are really strong. Risk is on. Now Bitcoin needs that. Now, Bitcoin doesn't just solely rely on that. I think Bitcoin's proven that over the last couple of weeks and months, that when it wants to move on its own dynamics, it can. Because at the end of the day, it's its own asset class with its own supply and demand risk factors. So when the ETF gets announced, you're seeing so many people buying Bitcoin. When you know that a halving is coming, which is going to reduce the block reward size in half, that's obviously going to have an impact on the price of Bitcoin. We're starting to see that come through, okay? But the risk on impact is also still very important. When the market feels like it's risk on, when the market feels like we could be heading into a loosening of monetary policy, maybe by the mid of this year, start to see our first rate cut and head towards a more accommodative macroeconomic situation, more money is going to be flowing into the economy. And where do you think that money goes? A lot of that money could be going into crypto. It could be going into the ETFs. It could be going into altcoins. It could be going into Binance exchanges and Coinbases as people buy their Floki and their Shiba and their Pepe and all the other real, non-meme coins as well, right? So this is the thesis behind why we expect such an explosive market this year. Not just because crypto specifically has its halving plus its ETF narrative, but also because we expect the global economy to start playing ball, to start entering a bit more of a kinder situation where inflation should start coming down. We should start thinking about rate cuts. We should start getting our risk back on. And we can see that in the traditional markets. I mean, if you take a look here, you can see stocks, yes, they're falling for the second day, but they're close to record highs, right? They're at or close to record highs, which is showing tremendous strength here overall as the market. So the UK news, hugely positive, right? Will other countries follow suit? Will other countries like the US allow Bitcoin and Ethereum, ETFs? Again, all good news. All things which allow institutions to put their money into Bitcoin. And why is this important? Because institutions can put far more than you and I. We can sit here screaming about how much we love Bitcoin. We're not moving, unless you're super well watching my videos, we're not moving billions and billions of dollars at a time, right? So we can love the crypto as much as we want, but you need that institutional funds in order for total market cap, which is this thing here. Let's just show you that. This thing, total market cap, to really start pushing onwards. And that is what we're seeing fundamentally here. I mean, if you look at these are weekly candles. Look at the flows of money coming in. Let's just look at this. On the week commencing the 5th of February, $170 billion flowed into crypto. The following week, we had another 9% pickup, another $157 billion. Jump 2 weeks forward, you had $365 billion of money coming into crypto. Last week, you saw $226 billion of crypto, and already this week, we're knocking on the door in one day, just Monday today, at $100 billion in crypto. This is not you, me, and the Uber driver buying $200 of Floki on their Coinbase account that's doing this. This is real serious money that's going, hang on a second, I need some exposure to this thing called Bitcoin. It's not going away. We thought it might be a thing that kind of fizzles out in 2008, 2009, but it's an asset class. It's here to stay. And hey, broker, hey, Fidelity, hey, BlackRock, give me a couple of percent exposure to this. I need it. But it's not a couple of percent of £1 million. No, it's a couple of percent of hundreds of billions of dollars, which actually moves the market. And that is exactly what we're seeing here on crypto. And so when you look at this and you start analyzing that, okay, how high can this thing go? Then you start to go, okay, this is powerful. I mean, if you're looking at $3 trillion, which is that yellow line there, was our previous all-time high of the amount of money that was flowing into crypto, we're not even there. So yes, Bitcoin is at an all-time high, but we're not at an all-time high in terms of the totality of money coming into the system. And that is because we haven't quite started our altcoin season yet. So for you guys sitting there wondering, oh, okay, what's going to happen with Bitcoin? What's going to happen? What do I do in my portfolio? Yes, Bitcoin is strong right now, which is why I say to eat your veg. Have your Bitcoin, have your Ethereum. But many altcoins, even when you look at it now, yes, they've had a crazy pump, but many of them are still miles away from their all-time high. So for you to be buying altcoins when Bitcoin is at an all-time high, which is still miles off their all-time high, that is what I call risk to reward skew. So that's something for you guys to look at, is look at your favorite altcoins and see which ones are still miles away from all-time high, given that Bitcoin is sitting there at all-time highs. Because one thing we do know for sure is we expect an explosive altcoin season during this bull run, and I'm all in for that. Okay, now the other narrative we need to understand before I wrap this update up for you guys is, how are we still getting these crazy movements on Bitcoin? What is going on right now? Well, you need to understand there's this effect called a short squeeze. Now, a lot of you would have heard of a short squeeze. It was, one of the main kind of proponents of why GME and AMC had their crazy run up. It's when you have people trying to short an asset class. Now, right now, if you think about it logically, if you're a shorter of Bitcoin, where are you sat? You're sat around all-time highs. You're sat in that region from 69,000 up to probably about 73, 74, looking to short Bitcoin because you think it's overextended. You know that there's FOMO in the market. I mean, we just covered off the extreme greed in this market. So their narrative is, okay, this is going to dump at some point, and I want to capture that dump to the downside. Right? When this flushes down 10, 15%, generally these shorts want to take a 10 to 100x short from that position so they can make 100% plus. That's what their thesis is. But guess what? If you can keep moving the spot market and keep moving it another percent, 3%, 4% like we do today, guess what happens? You start cascading a bunch of those short liquidations. And this is why trading leverage is so volatile and so dangerous for you, particularly if you're shorting. Remember, if you're shorting with leverage, technically you do not have limited downside. You have infinite downside because the price could go to infinity. Right? I hope you understand this. I may have to explain this in another video for you guys. Comment below if you do want me to. But you have infinite exposure. And so that is how you start to get a short squeeze. At some point, the people who are short Bitcoin, if Bitcoin price keeps going up, 73, 74, 75, they have to make a decision to go buy Bitcoin to cover their short, to close their short. But guess what? They're buying Bitcoin at the higher price. So maybe they shorted at 69, Bitcoin's now at 75, and they have to realize that loss in terms of that difference. So this effect is also taking into account, this is also playing a part in why we're seeing a pump. Every time Bitcoin moves a couple of percent, you're cascading a bunch of short guys and you're squeezing them. And that squeeze effect really starts to pummel the price up. And this is one of the reasons why I'm not selling right now. If you've not watched my video from a couple of days ago, please go watch that. A lot of people keep asking me, am I selling? Am I selling? I will be doing strategic trimming, like kind of how you trim the hedges, but I'm not selling right now. This market is too hot, it's too explosive, we're in price discovery, things are looking good, we're not even there at the halving just yet. I'm not selling. Doesn't mean I'm gonna be reckless, doesn't mean I'm gonna be chaotic, I'm gonna be smart, I'm gonna be strategic, but I'm not gonna be stepping out of this market right now. Hopefully you guys enjoyed this update. If you appreciate these type of videos, live and direct as and when the data comes out, then please smash all the likes. Do not forget to subscribe. If you actively want to trade with us, guys, jump into our Telegram community, jarscrypto.com/TG. Link will be the very first one in the description. I'm taking insane trades right now. I just took a 50% spot trade on Pixel in 4 days. 50% spot, no leverage, no margin, simple, repeatable trades. And I'm sharing exactly how I do that. I mean, in fact, I just shared my February trading results with our Telegram community. Over 331% spot returns. All documented, no cap, you can see it, right? Not like some of these other influencers who don't actually trade the market. I trade first and make YouTube videos second, and that's the difference. If you want to join us, jarscrypto.com/TG. Thanks for watching, and I'll see you in the next one.